What's up, everybody? In today's video, we're going to be talking about predicting where Bitcoin is going to go. So in my last video, we talked about predicting markets. We primarily talked about the QQQ and the SPY, which is your NASDAQ 100 and your S&P 500. And what we talked about was multiple indicators that give us the highest probability of predicting where the markets are going to go, where they will top out, and where they will bottom out. So I thought it'd be a fun little video to do the same thing with Bitcoin. Seeing as Bitcoin is flying high right now, I thought it'd be a great time to do a video on how far will we fly and when will we know that it is time for another big pullback or Bitcoin crash. As we all know, Bitcoin crashes hard. So stick around to the end of the video because I'm going to be giving you my price target for where I believe this run with Bitcoin is going to go. So first up, we are going to be looking back in history as we usually do when we are trying to predict markets. As things that happen in the past usually happen in the future as well. So we must look at our past to understand the future. So I take you back to 2016 to 2018. And here we have the Williams R percentage. And what the Williams R percentage essentially does is sort of act like an RSI. But I don't like talking about it like an RSI, like up here is oversold or up here is overbought, down here is oversold, and in here is your gravy spot. I don't like talking about it like that because if we zoom out, the majority of the time, like I talked about in the QQQ and the SPY video, the majority of the time with the Williams R, especially with markets or any company that's a good company and bullish over the long term, is going to be up here in this, what some consider overbought or overextended area. I like to look at that area as the area where we get our biggest moves. As if we zoom out here before we get into everything, if we zoom out, we see that this consolidation period from 2016 to 2018 had this massive 4,235% move. I have it measured down here because we'll get into that in a minute. And then here, this consolidation period, we had this massive 552% move. And then this consolidation period right here, which is our most recent, flying high from 2023 to present day of a little over 200%. Now, what do you see on the charts? When we had these consolidation periods at these peaks, that is when we get the biggest moves. 1 time, 2 times, 3 times. Not when we're moving through this sweet spot right here. When we're moving through the sweet spot, the move's okay, but the largest moves are coming when we are already at the top. So again, that's why I do not want to I don't want anybody to think of this Williams R percentage or Williams R range, also called. I do not want you to think of this as a RSI and, oh man, we're up here. We're hitting off of our, red line that we draw, right? We're hitting off that, and now it's time to sell. If you would have sold off the first time you hit that red line, back here, here, you'd be very mad because you would have sold for a nice gain, but limited gains, and you would have missed this big run up. You would have sold here, you would have missed the rest of this run up. You would have sold here, you would have missed the rest of this run up that we're having now, right? Or sorry, this run up. There you go. So now that we got that out of the way, let's move into actually predicting the markets. And I'm going to talk to you about 4 separate indicators. We're just going to take this one by one. We're going to start back in 2016, and then we'll add the other 3 indicators, and then we'll go to the next area of 2020 to 2021, and so on and so forth, okay? So, the biggest thing you have to know about the Williams R is when you come up and you break this 20 line right here, this dashed line that you see on your screen, this dashed line right there, that is your 20 line. When we come up and break over this 20 line like we did right here, you are looking for the first pullback after breaking over that. You are looking for the first pullback to create your support. Just like you have support and resistance on candlesticks and on your charts, right? You also will have it on your Williams R. Not everybody thinks of it like that, but I do. And that's how I've been able to be successful in doing this with predicting where the markets are going. Not to 100% accuracy. All these indicators will probably get you 70 to 90% of the way there, but nothing is 100%. So that first pullback is going to be your support. What I want you to do is grab a box. Okay. I'll do it with you. What I want you to do is grab a box, and you're going to go from this high down to this low and then draw the box sideways. Now, just so you know, the high does not matter. Just draw the box to the red line. Your red line is basically every time it's hit that point to the highest level and came down. So you just draw your red line to the highest point and you draw your green line to the lowest point. And that'll just kind of tell you, like, when you're hitting that, like, yeah, you could expect a little bit of a pullback during the month. Remember, this is a monthly. Each one of these candles is 1 month. So when you hit this, expect a little bit of a pullback, but it's going to be within the month, okay, that's happening. So you create this support you create this support. You draw your consolidation box, as I call it, and you are going to ride that consolidation box wave until your box gets all soggy and breaks to the downside. That is the first and foremost thing you need to understand when knowing when to top call Bitcoin. Okay, we're now going to add another indicator. And if it's not clear enough, you see right here, it broke. So we'll just leave that. We have our support here and we have our break here. Okay. And when we broke, we were at these two basically twin peak candlesticks. And we had these two high wick offs essentially with this massive selling pressure down, which would have been another indicator. But we'll get into that in another video with candlesticks. Could have been another indicator of, oh man, we have two, fat wicks up here, basically meaning usually indicating a sign of a reversal. And that's exactly what we got, right? So we'll just leave this up here. Now we can move down to the RSI. Now with your RSI, you are going to do the same exact thing. But like I said earlier, you need to definitely view the RSI as a signal of overbought. This is your overbought area. Down here below this, where are we at? Let me see. Down here below this 30 line, that is going to be your oversold area, and Bitcoin's never been there in its history on the monthly at least. So again, you can come up here and kind of make higher highs and then higher highs, higher lows, higher lows, higher lows, and then hit this peak up here, and then, have this fall, and then have this breakout of your consolidation box. But essentially, I want you to do the same thing. Yes, it's over bought, but the same thing up here. You can continue to run higher just because it's overbought. It's a hot stock. It's a hot item. Whatever. It's hot Bitcoin. It's Bitcoin season and it's flying high. So you get this first pullback here. You make your support after you broke up here. And I want a definitive pullback too, everybody. So you see this little pullback here? Nah. I want a definitive pullback, just like we had here. Boom, boom. Definitive pullback. Give me that support, and then let's continue higher. And notice the support is in different areas, okay? Because again, I want a definitive break upwards. Of our 70 line here. I'm not going to take this and then say I'm going to draw my box down here. No. One, that's a lot of room downward. Two, it was just a small little break. I want a definitive break and then a definitive pullback. I'll draw my consolidation box and we will stay in here until we break down. Oh, what's that? Yes, we broke down. We broke down a month after. No, we broke down 2 months after. Okay. So the RSI was way lagging on this one. And I'm going to draw these lines so we know when the breakdown happened. This breakdown happened this month. This breakdown happened this month. And we still see that a breakdown is not good, and it means that we're going to still go lower. So Williams R told you first to get out of this name. The RSI told you second to get out of this name. And even though it told you a little later, it still saved you. Just this candle alone was 33% down, guys. And then this candle was 19%, and then we fell all the way down here. So this move right here, from when it told you to get out, let's just take it from this high, still saved you over 73% of a downward move. And guess what? If you bought in down here when it told you to get in, and then you sold here, you still made over 1,000%, over 1,500% profit. So I hope the RSI makes sense to you all. Now we will bring up our MACD. Now our MACD moves even slower than our RSI and our Williams R. So our MACD wouldn't have told us to exit until back here. And that is going to be an even farther drop down from where the other two were telling us. And essentially what the MACD is you have a zero line here. When you're above the zero line, it means we're super bullish. When we're below the zero line, it means typically we're bearish. But as long as we are uptrending blue line, which is your MACD line, over your orange line, which is your signal line, as long as we are blue above orange, we are bullish. And then just think of it as if we're above the zero line, it's even more bullish and just extremely bullish, right? So we have 3 indicators here, all telling us a top, and all put together, we still saved some downside risk, right? The Williams R told you first, the RSI told you second, and the MACD told you third. Now, I always say this, you do not act upon just one indicator. Out of these 4 indicators I'm about to show you, which I'm about to pull up the next one here, you want to only act on the information given when you have 2 of your distinct indicators telling you it is time. It is time to exit. And one more thing you need to understand before we move on. These are monthly candles. So you need to understand that if it's the first of the month and you crash down through the box, it is not the time to get out. Now, if we are in week 3 or 4 and we are below this box, and then we're also below the box on the RSI, say on the Williams R and the RSI, or the Williams R and we're crossing downward on the MACD, well, then it's time to exit. You just have to take that into consideration because it's a monthly candle. And what I mean by that, I'll break it down even more. When you have a monthly candle, it's a whole month, right? So in that monthly candle, over the next 3 or 4 weeks, that candle is getting built. And as it's getting built, these indicators are kind of moving around until closer to the end of the month, where these indicators understand, hey, this is where this candle is going to end. And then once it actually ends at the end of the month, these indicators will be stuck in mud. and they're not going to move anymore because that candle is over with. Now it's on to the next month. And so it's like when you have a big move the first week of the month, you need to not be shaked out because it's only 1 week of the 4-week month, right? I hope that makes sense. So you need to take that into consideration as well. I just want you to know that in case you're in a company and that happens. Like with me, it was Viking Therapeutics. It crashed down below the box on the weekly. On the weekly Williams R, but I said, no, it's only Monday. I'm just going to wait. And then it was Tuesday, and I'm like, I'm just going to wait. And then once we got to Wednesday, it was actually starting to pull back even more Thursday. And then we ended the week back into the consolidation box. So that's a perfect example. You can go check out that video as well if you wanted to. But that's like the most perfect example of you just got to be patient and let the week, month, or day play out before making or get close to being finished, complete, before you make that decision of getting out. Okay, so now we are going to talk about our final indicator, and that is going to be our stochastic, which I call our trend. Now, with the stochastic, it doesn't go back past 2016 because it needed to get built up. These are monthly candles, obviously. So we come up here, and just like with the Williams R or the RSI, once we break above this 80 line, we consolidate sideways as we go higher. So, same thing. We want these consolidation boxes up here because that means we are going really high and we're going to continue higher. And what you want to do is, again, when you get that first pullback, but I'll just be honest with you all, I just take this 80 line right here with this specific indicator. I draw the box to the bottom of the 80 line. And essentially, I just use the 80 line and above is bullish. The 32 line and below is bearish. That's how I see it. Down below here, you're in the gulag. Up here, you're flying high. You're going to Mars. Okay. So for this specific indicator, I only get worried when we have a cross red over yellow or red through yellow to the downside. That's when I get worried. And also once we break that 80 line. But look what the stochastic here, and I'm going to zoom in. Look what the stochastic here told you about what was about to happen. The stochastic or your trend told you on this first indicator or this first line, along with what? Along with the Williams R percentage. Exactly. The Williams R percentage screamed to you at these tops right here, get out. And then your stochastic, your trend, followed that up with telling you also to get out. So what did I say? You get 2 or more of these indicators telling you to get out of a stock, out of the market, out of whatever it may be that you're playing, right? Bitcoin, another crypto, stock, the markets, future, whatever. When this tells you this, it is time to get out when 2 of them tell you. So we had 1 with the Williams R percentage, and at the same time, and actually before then, here you go, your stochastic moves faster in some cases than the Williams R. But it always moves faster than the MACD. Just know that. So your trend was the first indicator that you need to get out, followed by your Williams R was the second indicator telling you to get out. And right then and there, you could have got out on December 17th, or the month of December 2017. And you would have saved yourself, like I've already said, you would have saved yourself a downward move of almost 83%. And you would have locked in 2,000 to 3,000 percentages in gains. So now that we understand all 4 indicators that we're looking at and how to correlate it with the charts, let's look at a few more examples to really lock into our heads what we are looking for and how to find it. And as I go through this, I want you to try to pause the video and find them. I know I have my box already drawn, but I want you to try to pause the video and understand it before I tell you it. Because you being able to think logically before me telling you is going to get your brain working in a way, and it's going to become muscle memory, and it's going to allow you to understand this at a deeper level. You might not become an expert in this overnight, but you're going to be able to understand it, and the best way to understand and learn is by using your brain power. Use it, understand it, right? And that's going to help you immensely be able to learn all this. So we'll do this next quick one, and then we'll do a downward one, and then we'll talk about, like I said, we'll talk about where we are at now in the present day and where I think we're going. So from 2020 to 2021, we had this massive move up of about, at the peak, 620 some percent, right? And like I said, we had a nice breakup here into the Williams R. First thing we look at, the Williams R had a nice breakup, pulled back actually perfectly down here to the 20 line. And then we continue to consolidate, but not nearly as long as this last time or this future time. And then we had this breakdown right here. We also had the breakdown here on this stochastic on our trend. Look, our MACD wasn't telling us to get out, right? Our RSI wasn't telling us to get out until a little later again. So we'll draw the lines again. RSI told us here, along with our Williams R this time. Our trend told us to get out here along with our Williams R. Our RSI told us to get out here. Basically, January, February, March, April, May, 5 months later. Wow, that's a 37% loss because you didn't pay attention to the 2 indicators that told you to get out. You waited until 3 indicators. And guess what? You had this snapback, and the MACD never told you anything all the way until over here, basically, Jan 2022. So if you would have just listened to the MACD, you would have been in big trouble because you would have thought, oh wow, we're gonna go back up, and then bam, you got hit with this massive sell-off. You would have been just in shambles. Okay, so that was a quick one. Now let's look at a a big sell-off. So how do we know when we're bottoming, right? So similar to how we know we're topping, we're looking at all the same things, just in an inverse way. So we have this sell-off of about 65% here, but like I said, from this peak, it's probably about over 100%. Now, we broke down below the 80 line. Our first pullback created resistance this time. Remember that we're doing inverse, so this isn't creating support, it's creating resistance. So we draw our box to that resistance point, and we say, hey, the first thing we're going to look for on Bitcoin being ready to move higher and get into an uptrend is going to be a break of said resistance. And then we trickled sideways, and we didn't really go down that much more. We just trickled sideways, touched the bottom here twice. And then we had this massive move. And right here on, let's see, we'll just call it, it probably wasn't fully broken then. So we'll just call it January 2023. In January 2023, we had our break higher out of that consolidation box. On around the same time, I would say a definitive break, I would say March 2023 on the RSI. We did not yet cross on our MACD until, let me zoom in on this one, until right here on October 2023. But then we look down here at our trend, and we crossed right between where our Williams R was telling us that we're getting into a buy, and also where our RSI was telling us we were getting into a buy. So the opposite of a top call, and this being a bottom call, what I like to personally see with a top and to get out of a trade or get out of a stock that I'm in, due to a top and a big rundown coming, I look for two indicators going, telling me it's a top. Now, inversely, on the bottom calling, I've learned to want at least 3 of these indicators telling me we have bottomed. Not all 4. If we get all 4, that's great. And we do eventually get all 4 with the MACD, but the MACD moves a little slower and it had a fake out here, consolidation, and then it went higher. But even if you waited for all 4, how are you doing? You're doing good. If you waited for all 4 till here, let's just even say you got in at the top of this candle right here, right? How you doing? You're still 122% up. But let's say you wanted 3, and let's just take the top of this candle, 156% up. Or sorry, down here, 171% up. So it's really your call on how many indicators at the bottom you want to do. But if you want to know my personal strategy, it's at least 3. For a bottom call, for a top call, it's at least 2. And I also couple this with the anchored volume profile. So because my high 5 setup obviously consists of a charting pattern, the anchored volume profile, the RSI, the MACD, and the trend all going in the upward direction for these indicators, and then having a breakout of a charting pattern, and then having a volume gap and launching off a volume shelf of some sort on the volume profile. That's my high 5 setup trading strategy. So similarly, when I'm calling a bottom, I want to see all these things play together. The more, the better. If it's 3 on something like this on a monthly chart, I may enter. But I'm just going to take in everything into consideration before I make that move. So now brings us to present day. We have this beautiful consolidation box. We've had this huge run up here and this pullback to create this beautiful little support where we started our consolidation box, and we have not broken that to the downside. Got a little close here, but then we had this massive move up. So we have not broken this to the downside yet. And trying to sit here, if you're sitting here and saying, oh man, that one's, really big, like this one, got really big, on the consolidation, like, oh, it might be ready to break down now, so maybe I short Bitcoin or whatever. Like, that's not how this works. If this thing really wanted to, it could stay here and consolidate sideways forever and go up forever and ever and ever. We know that's not how these things work, but please do not be the person that sits there and is like, oh, well, this big, and I believe and I think, and my opinion, not actual facts, not actual what's going to happen, just your gambling side of your brain is telling you, oh well, oh man, it looks a little like overextended. I think I could place a bet here and make millions or hundreds of thousands or whatever, right? Do not fall into that trap. Okay? Look at the charts, read the charts, make your decisions off the charts. Not price movement, not what your gambling side of your brain is telling you. Make your decisions off the charts. Now stay with me because I'm about to tell you what my Bitcoin price target is off this chart. Okay. So created this beautiful support present day, and we were still consolidating sideways as we were running higher. And again, you had this pullback right here, which is a bear flag or a bull flag, if you can see it, right? Bull flag right here, and then a breakout now. So I didn't even do the measured move from the bull flag either. So 2 price targets, but the bull flag will be a smaller price target than mine, just being honest. We also had this move up here into this box. We had, now this is a little bit of a weird one, I will say, but I'm saying it because we didn't get, well, we did get 2 indicators going against us here. So you would have gotten out right here. So, you had the RSI run up. You had a nice pullback to create support, but then you had an instantaneous breakdown for this bull flag. So you had this one indicator, and you had the stochastic, the trend telling you to get out of this name. But here's the thing, guys. Just because it told you to get out and now we're running higher, you need to still follow what, if there's 2 of them and they're telling you to get out, they're telling you that for a reason, and you need to get out. You can always get back into a trade. You can get out of a trade, you can get back into a trade, you can hold a trade. Do not play games with these indicators, because 70 to 90% of the time they're going to be right and you're going to be wrong, and you're going to get hurt really bad in the pocketbook. You're going to blow up your account, so on and so forth. So do not play games with these indicators. All you could have done was sit here and say, okay, you know what? We got to break down here. We got to break down here. I'm going to exit, and then I'm just going to see. I'm going to see what happens. But I know the Williams R didn't break down. So maybe we don't have this big pullback, but I'm going to exit just in case, because the Williams R might be lagging, but it usually doesn't, right? So I'm just going to wait. And then you could have sat there and said, okay, still in the consolidation box. Oh, wait, look, we broke back into our consolidation box on our RSI. We're still uptrending on the MACD. And now we've bumped up, and we didn't break down below this 80 line. So we're still bullish. We curled back up. We're still bullish on the stochastic. Get back in. Simple as that. Get back in. Now's a great time to get in. Not financial advice, but what I'm about to show you and what I just showed you, RSI is uptrending, still in this consolidation box, and we already kind of went down here and nicked it. And now we can continue sideways in the consolidation box and continue higher. We're not up here in the oversold area. You want to see something? Look how high these got here. All the way up to 96.81, all the way up to 92.81, and we're only at 69.57. So these overbought areas get massive when we have these massive run-ups. Massive run-up, massive run-up, massive, not as massive of a run-up. And we got it right here. So we have plenty of room up here on the RSI to go as well with a run-up. So, like I was saying, everything's looking good on the Williams R, consolidating sideways. We got back up here. We're going higher bullish on the RSI. Good to go on the MACD. Good to go on the trend. Had a bull flag. Broke out of said bull flag. Continuing higher. Looking left, hitting the peak here. Or sorry, we already broke that peak here at 70. 4,000 some, and now we're heading higher. So, where are we going? Well, I'll tell you. We have a beautiful cup. This is on the monthly, guys. When you get some nice charting patterns on a monthly chart, oh baby, that is creme de la creme right there. We have this beautiful cup and handle pattern. And what happened? Boop. We smashed through that cup and handle. Smashed through it. Boom. And we were heading upside with all our indicators telling us we ain't at the top and we still have room to run. So the measured move from the bottom of this cup to the top point of the neck of, I'm not going to call it a neckline, but to the top point of the brim of the cup. Let's call it that, the brim of the cup. So you got a coffee cup, it's full of coffee to the brim. And what you're doing and looking for is to overcome the brim of the cup and break out of it. Our measured move from the bottom to the top brings us to a price target of $132,600. $132,600. That's about a 80, 70, 72% move. A 72% move from where we are at right now. Now let's see the timeline of said cup and handle pattern till we broke out. 1,096 days. Now I always say this. I always take the measurement to see how long it took us to form this pattern and how long it would possibly take for us to hit this price target. 2027, November 2027. So 3 years, pretty much. 3 years from today, basically. It would take us to get to 132,600. But a massive 70, almost 72% gain. And again, the thing you have to understand is this timeline is just something for you to put in your head, like, hey, it took this long, right? Because we have no other way to know the timeline. If we just sit here and say, oh, well, I'm just gonna do a next week call on $132,600 on Bitcoin. If it hit, you would be a billionaire, but that's not gonna hit, guys. So you have to kind of figure out somehow how to understand how much time it could possibly take. And this is the best way. You just measure the charting pattern, you copy paste it, you line it up, and you say, okay, by November 2027, Bitcoin should be at 132,600 by or before November 2027. I'll tell you, we can surely get there. We can get there next year. Who knows? Who knows? It's just a buffer to let us know. Now, if we measure our bull flag here that I called out, our breakout was right there. We copy that. We copy that. We paste it. We take it to the breakout point right there. And we're looking at a price target of $108,577. And this time frame is going to be shorter, obviously. This time frame is going to be right here, 396 days. Bring it on over here. Come on. Boom. Next year. What? Yeah, that's right. Next year. This time next year, our bull flag right here is telling us that we are going to be at on November 2025 or before. Our price target is $108,577. So as you can see, the indicators, we got a bull flag, we got a cup and handle, we're at all-time highs, we got plenty of room to run with no volume restrictions over here or gaps or shelves knocking us back down. We got a lot of room to run, and we got two fat price targets at 62% and 71%. So if you're getting all upset because I was saying 3 years for us to get to 132,600, well, how do you feel now? Because I just told you a bull flag that we had a breakout on. That time frame is only till this time next year to get 62% gain from where we're at right now. Sorry, no. Now it's 40% gain from where we're at right now. But still, 40% in a year, that's phenomenal. That is phenomenal returns. If you don't think that's phenomenal returns, I don't know what to tell you. Okay. You're gonna see people make hundreds of thousands or hundreds of percent in names and options and stuff like that. But what you really need to understand is the market's average return per year, which is the S&P 500, which is the best investment ETF you can make, is 8 to on a bullish time frame 10% per year. 8 to 10% per year. So 40%, you're quadrupling or more the return of the markets. And a ton of people don't beat the markets, especially on Wall Street, consistently. Yeah, it's a great return. So take that in perspective. Stop trying to get rich in a day. Okay. So those are my price targets. Those are my timelines. I'm going to most likely plan accordingly. Now, what do I always say? We had this nice breakout. I would like to see a pullback on Bitcoin. We had this, so we already got our pullback on our bull flag, and we continued higher. But now I would like to see a little bit of a pullback down here to about 73 to 70,000. 70,000 to 73,000. I would love to see a little bit of a pullback back there. And as long as my indicators are still good, I will be building a bigger position in Bitcoin. I will be, for my long-term portfolio, I will be building a bigger. I don't have options in this name yet. But I will be building options positions in this or IBIT or whatever. And I'll be even more bullish on Bitcoin. So that's how I'm be playing it. I want a pullback. If I don't get a pullback, whatever. I got this name in my long-term portfolio, my crypto account. It's all good. I'll just make money there. But I'm not going to chase this thing and then have it pull back hard on me down here. If you wanted to, you could do like 20 or 30% of your position now and then build out the rest of the position 70, 80% down here if it does pull back. That's another way you could play it. Maybe I'll do that. I don't know. We'll see. I have to plan out this trade. But I wanted to primarily talk to you guys about how to predict Bitcoin. I talked to you about predicting S&P 500. I talked to you about predicting the NASDAQ 100 with the QQQ and the SPY. Now I wanted to help you and teach you how to predict something like a Bitcoin. And yes, you could do this with NVIDIA. Or you could do this with Meta or any other Mag 7 names. You can do it with anything. You can do it with any stock you want. You can do it on the monthly. You can do it on the weekly. I wouldn't do it on the daily because it's really crazy back and forth. So if you want to know where your company's going, look at the monthly. If everything looks good, look at the weekly. That'll tell you like a little bit shorter time frames of where things are going. So I hope you guys appreciated this video. Hope you guys appreciated the tutorial videos and the gems I'm dropping out there. I really hope you guys are learning. I know you guys are learning. You guys continue to send comments my way and DMs my way, letting me know you're really enjoying the videos and you're learning, and that makes me feel all warm and fuzzy inside. And I really appreciate it, and I'm glad I'm making a difference and I'm helping people out there um, to become better investors, better traders, understand the markets better. That's my whole goal here. I just want to do good for people. So I appreciate all of you guys that have stuck around to the end. It was a very long video, but lots of great information, I feel. Let me know in the comments what other videos, what other breakdowns you'd like to see, um, what else you don't understand about the markets, or anything you don't understand about this video. Drop a comment, send a DM my way. I feel drop a comment just so we get, because that way I can answer the same question if somebody else has it. Drop a comment, I'll answer it there, and then yeah, that way if you don't understand anything I was talking about today, I'll be happy to explain a little bit more in the comments. So I appreciate all of you, and hope you have a great rest of your weekend. See you the next one.